Hello, everyone. My name is Michael Dotson. I'm with Banner Bank. I'm the Community Outreach Officer for Banner Bank. I also have the privilege of serving as Treasurer for the Financial Empowerment Network. I'd like to welcome you to the Community Development Service Expanding Participation in Bank-On Coalitions. And in a moment, I would like to introduce our moderator. However, prior to that, I would like to just say a couple of things here. These challenging times have required banks to adjust to the way that we do business. These changes have allowed us to better serve our customers. In addition, we've been challenged as well to come up with innovative solutions to assist small businesses impacted by COVID-19. And today I'm pleased to announce that Banner Bank has created the Small Business Opportunity Fund to help address social and racial injustice by augmenting the economic viability of COVID-19 affected minority-owned small businesses. This initiative is launched with a $1.5 million investment. The fund will assist underserved small businesses with gross annual revenues of $1 million or less that are owned by Black, Indigenous, and people of color, as well as businesses located in economically distressed rural and urban communities. Establishing the Banner Bank Small Business Opportunity Fund is an important step in our efforts to find new, meaningful ways to help eliminate racial and social inequities. This fund is one more way that we can bring about positive change while helping businesses thrive. And because it's vital to get funding to the businesses as soon as possible, we've partnered with 3 well-known and highly respected community development financial institutions. They're already mobilized. They're actively assisting small businesses within our footprint. CDFIs provide specialized credit and financial assistance to underserved markets and populations. With $500,000 in investments in each CDFI, they will in turn identify and administer financial assistance in the form of low-cost loans, grants, and credit enhancements, generally up to $10,000 to each qualifying business. Now, the organizations that we've chosen to work with are Rural Community Assistance Corp, which is a CDFI specializing in assisting rural communities in every state within Banner Bank's footprint. Craft 3 is the other partner. Craft 3 is a non-bank community lender that provides commercial loans to established nonprofit organizations and growing and startup businesses in Washington and Oregon. And our final partner is Lendistry. Lendistry provides small business owners access to capital through SBA, term and commercial real estate loans and lines of credit, as well as business advising and technical assistance service to keep them expand, improve, and or sustain their businesses. Social and racial injustice is a complicated issue that requires a multifaceted approach from all of us, our industry, and frankly, all businesses. At Banner Bank, we remain committed to doing our part to accelerate the change our nation so desperately needs. There's so much more work to be done. Establishing this fund is simply one more step in turning our intentions into actions. So again, we're pretty excited about this opportunity. We look forward to the outcomes and the impact, the positive impact that these dollars are going to have in our respective communities. Now, at this time, I would like to introduce Erwin Reeves, who will be chairing our Expanding Participation in Bank-On Coalitions. And after this session, we will also have Anthony Power with the Seattle Clemency Project. So please stay tuned. We have a lot of great information. And at this point, Erwin, I will turn it over to you.
Good morning. Welcome to the panel discussion. My name is Erwin Reeves, and I will serve as the moderator. Please note this meeting is being recorded. Next slide. These are our guidelines for today's webinar. Please note we are in the meeting component of Zoom. because we want to be interactive. Be sure to mute your mic in case your dog has an unsolicited request or the waste management company decides to drive down your street in reverse. Please use the raise your hand feature if you have a question as we continue through the panel discussion. Also, note if you don't want to share your contact information, please send an email to me at the email address shown here. Next slide. Our objectives for Bank on Washington Forum are as follows. Collaboration among community stakeholders requires open and honest communication when developing impactful products and programs. Collaboration may include non-traditional partners, that is, people and/or organizations that you have not considered working with before, and implementing strategies that meet emerging community needs. I want to emphasize emerging needs. 2020 has taught us what worked 2 months ago might not work now and may need to be altered again in the near future. Next slide. This came out yesterday. I want to read a couple of quotes from the CEO of the American Banker Association. First quote, despite a strong and intensely competitive financial services industry, we know that millions of Americans and families of color in particular remain outside the mainstream banking system and are missing the economic opportunities that come from having a bank account. This is a chance to leverage opportunities. For my compliance and CRA officers, these comments will open doors in your conversations with executive management. For my service providers, as the door opens, prepare to engage. That is, document how you propose to create mutually beneficial collaboration. Next slide. The second quote, by offering bank-on certified accounts with the help of their core providers, America's banks can open doors of opportunity to new and returning customers, demonstrating the banking industry's commitment to financial inclusion. This is a statement we can literally take to the bank. The timing could not be more perfect, but there's still much more work to be done. These are very powerful words, but if they are not connected to purposeful actions, then they are only words. We have to turn the words into action that includes implementation that leads to more accounts being opened, that leads to greater financial stability for low-income communities. We have to take purposeful action. Next slide. The FDIC conducted a pilot for safe accounts several years ago to test the viability of low-cost deposit accounts without overdraft features. I bring this up to serve as a historical perspective if your financial institution does not have a low-cost deposit account or has concerns about providing a low-cost account. As you can see from the results, the safe accounts performed on par with or even better than other transaction and deposit accounts offered by the pilot banks. A large portion of the account holders maintained their accounts during the year, and the cost of offering these accounts were roughly the same and sometimes lower because there were no paper check related costs. Additionally, the safe accounts are a way, or that model, are a way to reach new customers or to increase the use of financial products by existing customers. Next slide. The FDIC pilot shows and tests the viability of the low-cost accounts. And we can see here some of the challenges that resulted. Really around marketing and advertising for the accounts, reaching customers in new markets where non-bank financial service providers compete for those customers, and the importance of staff training. You can create an account, but if you don't market it effectively, it will have low utilization. So it's very important to acknowledge and overcome these challenges. Next slide. Lessons learned. Very important to train. And in this instance, we're talking about customer service representatives, tellers, regarding the accounts, but your new accounts representatives should be trained as well, so that you have institutional capacity to help make this product successful. There's a very low risk for these accounts for fraudulent behavior and overdrafts because those features have been taken out, and you're working with community partners in order to minimize that fraudulent behavior. And then finally, this template is very flexible, so it can be used in a variety of circumstances based on what your institution desires to do in establishing a transaction account for low-income consumers. Next slide. These are our panelists for today, and I'm going to ask them to provide a little bit of an overview of their organization. We'll be talking about some of their products and activities in order for you to get a better idea of how you can incorporate bank-on accounts and bank-on certifications for your financial institutions in an effort to meet community service needs. David, I would like to ask you, what is the best way for consumers and community-based organizations to access your programs and services?
So, good question. A couple of things that I'll answer it in a couple of different ways. The first is, just like most financial empowerment programs, we strongly believe in meeting people where they're at. And I think that bank accounts work. The bank account sign-up process works a lot better when it's connected to a public or private program. So things like free tax preparation, public benefit enrollment, the COVID economic stimulus payments, those were all opportunities that people were getting paid, and so or getting money back, and so that's a perfect time to open a bank-on certified account. So one of our roles is to work with both financial institutions, but also county government, city government, and nonprofit programs to implement banking access into their already existing infrastructure of programs. That's one way that we're doing it. And we have a couple of different methods of doing that. The first is sometimes we do it in clusters, meaning that we have a concept that we've either tried somewhere or somebody has brought to us, like a workforce development cluster where we reached out and basically did an RFP for workforce development groups to submit to us about how they could participate in our cluster of testing how you could have bank account access in a training program for workforce development. The other way is that we invite proposals where we provide technical assistance to groups and basically say, and say like, bring us your best idea. Perhaps we can help secure some funding for it. And then also we'll learn from you all as we bring banking access into that program area. That's our program development aspect of how we work with banks, because I think it is really, and credit unions, it is really important not just to turn to a financial institution and say, hey, create this account, here's what we want you to do with the account, and good luck getting people into it, right? Like, we have to be part of the marketing and pipeline solution for this program. The other thing I would say is we provide technical assistance in a number of ways. Obviously, we can connect people to the FDIC, OCC, or Federal Reserve Bank, so that they, if they have, as a financial institution, if they have questions about how to word language in their disclosures, or what's allowed, or how they can get CRA credit for participating, those are all connections we're happy to make. We also are so lucky, and I know Adam has done this for us as well. We're so lucky that our financial institutions are so willing to talk to other financial institutions about how to design the product, or their experiences, or whatever it might be. The technical assistance on a peer-to-peer level from financial institution to financial institution never ceases to amaze me. And then the final thing I'll say is that the core processors, which I know that you spoke about in your introduction, they are now, and for those of you who might not know, the core processor is basically the technology system behind what financial institutions do when they issue a payment, or you deposit money. Whatever. Basically, they're the brains behind the body of a financial institution. The core processors now are willing to design template accounts that can be customized by a financial institution to meet the bank on standards. So you can literally go to your processor and pull something off the shelf and say, we want to, here's the name we want, and here's the cost parameters that we're looking for. Help us make this account meet the standards. That is to help smaller financial institutions who might not be able to afford to customize and design an account from scratch. So this is a really exciting time because that part is a newer thing that is going on. So I think those are the three main ways that we're working to sort of partner and get these accounts into the community.
Thank you for that, David. I want to kind of piggyback on your comments regarding the core processors in that infrastructure. For my smaller financial institutions, now is the time to approach this, because before you'd have to, and Adam's going to talk about this a little bit, but before you kind of had to rig your system a little bit to try and get to those features. They're there, but it might not be a part of the package that you purchase because you're trying to operate efficiently. What you now have the ability to do is have something that's standard, have something that has guardrails, that you can still meet your goals, but it's going to be a little more efficient for you. It's not going to take quite as much brain damage in trying to get that process done, because your system will allow you to get that done. So this, and something I should have said at the beginning, Bank on Washington is not just a big bank product. Bank on coalitions are not just for big banks. You can find a way to meet the needs of those consumers with your cadre of products. It's a matter of just coming together with the various departments, as Adam talked about, making those steps. And I think something that has to be understood, Adam works in compliance and still had to go to his colleagues in compliance and explain how this is beneficial to the bank. So the responsibility is layered. But at the end of the day, there's an opportunity to generate revenue and meet community needs. And I think that for your smaller institutions, that's important for you to understand that it's not just something that's cookie cutter that a big bank's just throwing some money at to make it look pretty. There could actually be customer development that takes place to help you build in your capacity to operate an account that meets the national account standards. Adam, I kind of queued you up there. I would like for you to talk about kind of that conversation that you had with management regarding why your account, and if you would state the name of your account and talk about that viability and what kind of led you to, when the light bulb went off, what happened for you? That'd be the easiest way for me to say that.
Yeah. When I think about the national account standards and the account that we have is the foundation account. What was neat about all of this to me was as much as we were bringing information around what the CFE fund was putting out there, and just what these other bigger banks were doing, what the CFPB was pushing for a period of time, and our prudential regulators, we were also having discussions just independent of that, of understanding that people are not writing checks as much. Overdraft fees are very, they tend to, especially for lower income people, they're just destructive. And we wanted to have a sensible account. And so what was neat for us at Columbia was that it wasn't just it wasn't just like that there was this push to offer this an account that aligned with the national standards. We were having internal discussions, independent, where in recognition that people are going more. They're using more just their debit cards. They need their internet banking. They're not going into the branches as much, and so it was in some ways it was also, we were realizing we needed to take what the CFE fund and the national account standards, like what that was what they were looking to communicate there. We needed to take that and make it approachable to folks at our bank, but like in a way that also aligned with the discussions they were having. And so through that, we saw that this account, that having a monthly service fee that is not will not be waivable unless it's, in our case, it's for if they're a minor and they have an account, then we're not going to ding them with $3. But like we wanted to have an understanding that that's going to provide a baseline for us. Also, there's interchange fees, and when folks are using their debit card, and then there's even a modest amount in for ATM fees. So when you put all that together, we saw that this is an account that is sensible for not only these customers that have had a difficult time in getting an account, but also it also made sense for the bank. It's an account that just really just is all around. It allows for a spreading of fees in a way that it's going to be something that can be absorbed by folks who are using this account in a way that it's not going to be charging them too much, but also it'll be something though that makes sense for the bank too, because at the end of the day we are a publicly traded institution, and there does and we are putting services out there that we need to generate some income on things. And so it was once we started helping folks understand that like the fact that there's no chance to get overdraft fees, there is though going to be more modest and much smaller fees, but that should help us when you think about the increasing your account base. It's going to make sense down the line.
Okay.
Does that help?
Jennifer, that helps, and I think we're going to come back to marketing in just a moment. But Jennifer, what can you add to that as far as the work that you've done with Peninsula Credit Union in getting management to understand how the benefits of the account?
It actually wasn't very hard. When we started, three of our branches are in low income areas. And so we're constantly trying to figure out how we can help people in our community. And one way we created a position for a community financial educator, and so who is an employee with Peninsula Credit Union. And this whole things started of us thinking that we need to get them out into the community because they're kind of scared of coming into the scary financial institution because, you know, people have had derogatory financial institution history. And so we started that a few years ago. And basically, with management, what we were trying to figure out is how can we build a checking account that would benefit the people that we're serving. And so really talking with the leadership team and finding out what are the obstacles and how can we overcome them. And so we rebuilt our checking accounts, and the one obstacle that we were coming over, our checking account is a renewed second chance checking account. And one of our obstacles was, like I said, the dormancy fee. And so how do we avoid charging that dormancy fee? You know, and what we found out is how our system is coded is that code for the renewed checking account. All we had to do was flip a switch, and all of a sudden, if their account goes dormant, they're not going to get that fee. So really, it was just a collaboration of the whole leadership team of going, okay, these are the obstacles and how we're going to get over them. So it was a great collaboration, and we really learned a lot going through this process. So it's just benefited us as a financial institution as a whole.
So, Jennifer, while I have you, yes.
I just
So Jennifer, while I have you, go ahead, Adam. Adam, go ahead.
Well, we also had, I just wanted to add some issues with the dormancy fee, and so in helping some of our even, compliance and risk folks, and then also our system people, you know, to understand, you know, not even like, you know, what switch could we just flick to turn it off, but then, you know, would we also potentially have scrutiny, regulatory scrutiny around that, and that especially was around some of the state agencies. And so, you know, something that we did was we went to each of the state agencies that Columbia Bank is part, or that each of the states that we're part of, and we actually got written confirmation around how to handle that, you know, the dormancy fee and everything there. And so, you know, that's another thing too that David was speaking about, collaboration. That's more than happy to share that kind of information and who we talk to, because it was something that we needed to make sure that, you know, what we're putting out there was not only safe and sound, but also was going to be regulatory compliant.
Yes, wonderful. Jennifer, you mentioned that you have 3 offices located in low-income areas, and so that kind of helped that transition. What is your relationship with the asset building coalitions or your nonprofit partners as far as making referrals of their clients to your offices?
Yes, we work with numerous nonprofits in our areas. With Mason County, and in Mason County, we have 2 branches in Shelton and Belfair, and we work with our financial community financial educator and myself do work with Turning Point domestic violence. We work with our community lifeline, Sound Learning, and Northwest. I can go on and on, but basically what it is us all partnering together, because we all have clients that have the same needs. And so they refer to us, or the community financial educator is out, has 2 sites, so that the educator is in different locations. So he's going to where the needs are in our community and has offices there. So we have, and Becky was mentioning that she likes to do the warm handoff, and that's really how it works for us too, is, you know, Crossroads Housing will call us and say, we have a client, send them on down. They'll just ask for me, or the staff is trained. And so basically when they come in, we know that everyone that walks into our door has a need, no matter where they're coming from. And so it's us just asking questions and what are your needs, and but it is nice having that, hey, I've got someone coming down, they're really nervous to come in, and so just putting that extra you know, hand holding on with those people and really making sure that they feel comfortable.
I think that's wonderful, very helpful. And there are 3 keys that I would like folks that are listening in to pay attention to. She mentioned staff training, so that when I'm sure she goes to lunch sometimes. And that would be nice, that if someone just happened to come in and she happened to go to lunch, that someone can actually know about the product and know what they need to do, because they're familiar with the process. The other thing is the warm handoff, that communication, and Becky talked about that. I'm sure that's something that Columbia is looking at as well. But I would say that for a successful bank-owned coalition, it takes that level of communication back and forth between the institution and with the community partners, the nonprofit organizations, whether you're an asset building coalition, financial coach, municipal service provider, it's having that direct connection. So for my financial institutions, that means having a point person in your retail offices that understands the product and is willing to be warm and welcoming. And this has come up a couple of times. People are intimidated when they walk into financial institutions. It's just a natural human response. And so it's important to make folks feel welcome. And you're doing that. That's a part of what you're trying to do. You just have to recognize that these folks might be a little bit more timid because of previous experiences, or their perception might not even be their own actual experience. It might be the perception they have based on something that happened to someone in their family, or someone that they know, to someone that they trust. And so we want to be warm and welcoming in that process, but training is key. Product knowledge is key, in addition to having the marketing piece. Now, David, I just talked about, oh, go ahead, Jennifer.
Oh, I just wanted to add,
You going to say something else?
It's not just opening up an account, opening up a bank on account. It really is forming a relationship. They're coming to us for needs, and you know, it takes time for them to have that trust. And so the more we can help them make their financial picture look better, those are the people that are going to succeed even better in the future, and be those members that spread the word on where they can come to have their needs met.
That's great. David, I want to talk a little bit, or would like you to talk a little bit about kind of maybe some of the marketing piece that you help both the banks and the coalitions understand about what they should be doing as it relates to the National Account Standard.
Sure. So I can say a couple things. It's a little bit longer and more involved, so I'm really welcome the follow-up. But we've done focus groups and surveys for quite a bit of time. Sort of looking at can messages around certain pieces of banking help people become banked? And the truth is they can. Some of the messages that we've seen that play really well are controlling your money. That's a message that works really well. No surprise fees. That's a message that works well. safety and security about your money is something that plays well. Some of the things that didn't work as well were some of the messages around like long-term success, starting a business or those kind of things. And I think that makes sense. People aren't quite there yet. They're, as one of the other speakers was saying, if they have, $500 in their pocket and they don't have a bank account, they're not thinking that far down the line. The other thing is that some of the things that we often use in messages that we think, and we've used for a long time that we think work, we were very much told by focus groups were not as effective. So one of the things that we often hear is that like banking is for everybody. One of the challenges with that is people, it's motivating to people, but not necessarily believable. And that's because they haven't seen the success of banking probably yet, so that the message doesn't resonate yet. So if the firm that we use to do that marketing research sort of talked to us in a way that said, basically, if I told you guys all that instead of charging you $10 for a tuna sandwich, instead I was going to charge you $2, so you get an $8 discount. If you hate tuna, you're not going to be interested in the message that I'm sending you. And so we're like, okay, that makes some sense. So some of the messages require us to do some deeper dives and form these relationships. One of the things, and this is kind of my transition and how we can help, one of the things that we can do is provide you with, bank on a website. We can help create that for you. We've worked with Alice. We also can provide marketing materials that you can customize, whether it's a brochure or something, something that's on social media. We are going to be launching over the next couple of weeks our first ever large-scale marketing campaign for certified accounts, which will be done through social media, mainly Facebook, Twitter, perhaps some other mediums that we come up with. I'll have to ask my kids for what those are because I don't even know what they are anymore. But usually we're a wholesaler. So usually we provide all of these tools to the financial institutions and the coalitions themselves. And then it's up to them and you all to distribute that information. This is our first attempt at going directly to customers. So we're excited to see how it works. I would love to share those materials with you. They're not quite finalized, but once they are, I'll send them through Alice and through Edwin and others so that you guys can see, our attempt at really sort of letting people know that these products exist on a bigger basis.
Thank you, David. So I want to go back to the chat really quickly. We've got a couple of comments and some questions there. And so I want to go to Iris's comment, which for those of you who may not have seen it, she's been out of the bank on loop for a while, and she's hearing about families that have lost their jobs due to COVID, who have accounts, and now find themselves with overdraft fees. The highest that she heard of is $98. How can Bank On help these families whose priority right now is putting food on the table and paying bus fare so that they can get to their jobs? And David, you made a comment in the chat, which was, that's the beauty of Bank On certified accounts, never an overdraft fee or an insufficient funds fee. Adam, I see you queued up there. What would you add to that?
I would say,
as far as banking and.
Yeah. I would say, that's one of the other things that's needed to make a successful account. As David was noting, not only are there requirements that the national standards has, but there's also strong recommendations, as in helping make your just overall opening process more approachable. And that was something also Columbia did. Before we implemented the foundation account, and then also some new account opening, a new account opening process, we were declining about 15% of the consumers that were coming in. We reduced that by over half. Now with our new process, our new account opening process, it's really people who are doing outright fraud who we have to have continued discussions with those folks about what we can do. But we're only declining 7% of our customers that come in. And so when I see something like that having those overdraft fees, that's a person that likely I could see Columbia, we would open an account for them because that's not fraud. And so, I mean, of course I can't guarantee, but we have to see other things. But like we have made an approach, our account opening process, the approach, so that it's makes more sense for folks that might be struggling or had some things in their history that was a little tough. And so we look to work with, and that's what we also train our retail folks in the branch to find ways to work with these folks to get them this account that can help them then get back on their feet. They'll also have a debit card. They'll have the ability to when it comes to paying their bus fare, to things like that, like as long as they got money in the account. It's also going to be easier to open as far as just the overall amount needed, just $25. And so again, that's the beauty of the national standards and at least meeting these requirements. It makes sense for people who are just either starting out or looking to get back on their feet.
Thank you, Adam. We have another comment in the chat. This is from Annette Case. I'm wondering how many institutions actually implement monthly account fees. $5 a month is significant, especially for low-income households. And David, I'd like to throw that question to you because you've got a little bit more of a perspective. And the one element I'd like to add to that is, are you seeing growth as far as the institutions that are coming in a little bit better prepared to offer those low cost accounts, or are you seeing no cost accounts?
It's a really great question. As I indicated earlier, we're seeing this race to the top, which is really exciting. Who can offer the best account in a friendly way? I mean, the financial institutions. This is one of the best parts about Bank On is sort of that financial institutions aren't competitive in the same way that they might be for like mortgages or business construction loans or something like that. So it is interesting. I've seen more accounts that are less than $5 than the ones that are at $5 exactly. I think there's a couple of reasons for that. One is financial institutions are starting to see that their losses on this account are not high, specifically compared to their current checking accounts that they offer. It's such a safe account. And also when you don't have paper checks, people, and Adam hinted at this too, people are swiping this card like crazy. So you're making money on the interchange as well every time somebody swipes that card. I think also one of the things that we're seeing in terms of banks being prepared for this is that again, the core processors are starting to be really helpful in having the features and designs for this account ready to go. That's newer and exciting. So they're coming in more prepared. They have the account ready to go. I think the other thing too is that there's some external pressure. And by that, I don't even mean from like regulators. There's some external pressure coming from fintech accounts that are third-party non-bank products. So, and I'll use a couple of names, and I'm not endorsing anything, and I'm not endorsing anything, but accounts like Chime and some of the accounts that are out there like that, these accounts are very similar to what a Bank On account looks like. There's some things that like deposits and other things that I don't think are in the same ballpark. I think the Bank On accounts are better regulated, have more features, allow branch access. There's some significant advantages for most people for a Bank On certified account. But my point is, I think that the market is shifting in a way that financial institutions have identified with and are saying, okay, if we don't offer this, we have a hole in our suite of accounts, and because of that, what we want to do is offer this account. We know that it's popular already for other financial institutions. So we're coming in, modeling our account in this way. We often hear that this replaces we often hear this replaces a second chance checking account, which are not popular, which are expensive. Banks generally don't like them, and credit unions don't like them. The customers like them even less, I can assure you, from our focus groups. We found that out. So this often replaces that, but this also is a product that millennials are interested in. For somebody that's getting 1 or 2 direct deposits a month and doesn't want to write checks, this is a product that's extremely popular. And then the final thing that I'll say about sort of the banks coming in and being, excited and prepared for this is the coalitions have done an excellent job in being a steward. So it is when you have a bank on Washington, run by somebody like Alice, and when you have a bank on Los Angeles, run by their Financial Empowerment Center, you've got this pipeline that we were talking about that exists, and you're bringing this account in, and you're not in a place that is really a hard selling point to bring people in. There's a pipeline of people waiting. And then the final thing I would say is that based on the research from the Federal Reserve Bank of St. Louis, you can look and see that 75% of the new accounts opened for Bank On were completely new customers to the financial institution. So that means that you're not poaching off your existing client base. These are customers also who have never had a savings account or auto loan or anything with you before. So these are completely new customers to the financial institution. So when the financial institutions come in, they're excited about that.
David, that's great.
Erwin, I just want to.
I just got it, Alice.
Yeah, could we have everyone mute if you're not talking? We have some background noise. Thank you.
Becky, your comment in the chat regarding the client knowing the name of the bank on account or the type of account. Can you talk about the importance of that?
Well, it's helpful when someone goes to the bank, if they're going and you're not doing like a warm transfer, letting them know, this is the name of the account that you're looking for, like Columbia's foundation account or the Peninsula Federal Credit Union's Vista account. So they can go in and say, this is what referred me. And the other thing to think about, though, that's important here is that, like, if I send somebody to Columbia and I say, ask specifically about their foundation account, so they make that connection, that doesn't mean that that's the only thing that Columbia is going to offer them. So there might be a different account that is a better fit for them than this, the foundation account. Does that make sense?
That absolutely makes sense. And I saw that we had a comment from Miss Lockett out of Atlanta, who said that, and I believe you agree, that this should be a best practice.
Yeah.
In trying to help the clients transition. And it gives them an aid of comfort because they're not coming in and saying, hey, I want that, the account, the special, they could come in and identify
it. People or whatever, that's
right.
Say that. That's all.
That's exactly right. That's exactly right. So I'm going to do a kind of a quick, we've got roughly 6 minutes. I think I hit all of the questions. If I did not address your question, please raise your hand in the chat. And while we're waiting for those responses, I want my panelists to stay alert. I'm going to do a quick run through so that we can prepare for Anthony's presentation. Oops, too fast. These are the desired outcomes. And I want you to understand on this first level, I was forced to use a couple of acronyms because the list is exhaustive. Yeah, it's large. CBOs, that's your nonprofit organizations, that's foundations, that's to a certain degree quasi-municipal service providers. CDFIs are community development financial institutions. Michael talked about the relationship that Banner Bank is establishing with some local CDFIs to help address needs. And while those business owners may have banking accounts, not all business owners do, there's a way to get them started in that process, and that is to help to have them first learn how to manage their individual account and then graduate towards their business account. And then you've got government agencies, so federal, state, local. It takes all of us to participate in this, to make this for the benefit of the community, but it also makes our economy stronger. If you've got more people that are able to utilize financial services, and in the COVID era, we're getting closer and closer to this cashless society for health reasons, not for necessarily economic reasons anymore, not just economic reasons. So we want to make sure that we're able to allow everyone to participate. Another thing is integrating financial education. And I say here high school curriculum, but that's not the beginning. The earlier we start in teaching people how to understand and build a relationship with money, the better off they will be long term. So I'm saying high school just because we should have that as a perspective, at least have a goal, but it starts before then. It starts with the counting of coins with small children. It starts with getting adults that have had a negative experience and helping them to understand things that they need to do and put in place to make that happen. But our main income, the main outcome that we want from this is increase the financial institution participation in Bank on Washington, excuse me, and bank on coalitions in general. I think it's imperative that the institutions look at what they have as their market, look at what they're trying to do and establish their market share, and then from their heart, look at what can be completed and done to help support their community development services through a participation with Bank On. And what it leads to is the opportunity to identify other things that are taking place. Your investment might be the funding of that financial education that's taking place in support of your asset building coalition partners. That lending opportunity may show up because someone that's graduated from an IDA account, an individual development account, that's starting a business, and then they need business loans because you were there helping support them from that standpoint. You now have the opportunity to expand a lending relationship. It may be from that service that you're providing, both in supporting Bank on One by providing an actual account that can be counted in that community development service test, or having people that are volunteering to provide support, either providing technical assistance in the development of a product or a program, actually teaching courses, or helping your nonprofit partners build out their infrastructure from their technology piece, using your experts to help them grow what they're doing and their capabilities and their infrastructure. And so when you have strategies like that that are eligible for CRA consideration and are meeting that community need, it's win-win for the financial institution, but it's win-win for the partners as well. I'm running out of time here because we don't want to cut Anthony short at all. I haven't seen any more questions pop up in the chat. This last piece, I think, is very important. And when I say early planning, if you're thinking about it a little bit, create some framework about it. But you're not going to run down that path. We've heard from our panels, and we can consider them experts in this field because they are actually doing the work, that it takes planning. They're doing this collaboratively, both internally and externally, but getting feedback from the end users, making sure that they understand what's going on and what those needs are and what those needs look like. Engaging the entire household when possible. That's really our nonprofit partners, which they are doing that. But the banks have to think about that as well. As you're putting this together, what's your long-term goal and how can you engage that? And then documentation, making sure that everybody understands their roles, understands what success looks like, being able to celebrate that. Yesterday, I talked about the before action review. This is something similar along those lines. And then implementing programs and effectiveness, and then assessing what you've done, and then being willing to refine so that there is sustainability. And so with that, I would like to thank my panelists very much for participating and indulging with me in this adventure. It's been great, and I think, let's see, there's 2 new messages. Let me make sure that those weren't the questions that snuck up. No, I think we are going. And so David has left some information for us in the chat room. And he's left a couple of links, as well as it looks like a PDF making the case for banking access. It's a briefing done from October 2019, as well as his email. Again, I said at the very beginning, we want to make sure that we're collaborating. And so you want to make sure you're using and having access to these resources. So with that, I'm going to close this segment. Thank you very much for the panelists. I greatly appreciate your input and your contribution for us today. Next, I'm going to start with introducing our speaker, Anthony Powers, who works with the Seattle Clemency Project. And I've got a very long bio for Anthony. And I don't want to steal any of his thunder because and I'm taking too much time right now. In effect, this young man experienced some obstacles and some turbulence early in his life. He made some choices after that took place to help him kind of rejuvenate himself. And with that rejuvenation, he saw the ability and the need, they saw the need, but also the ability to be able to help others. And the work that he's doing right now is important, but it aligns with all of the things that are taking place as it relates to economic and social justice, as it relates to bank on and access to financial services. And so I would like to welcome him, and I would like you all to welcome Anthony Powers, who is going to enlighten us more about the Seattle Clemency Project. Anthony?
Thank you, Irma. And I'm first off, thanks everybody for being here. And thanks to Alice, thanks to Irvin for what you just said. Thanks to Alice, who's been behind structuring a lot of the stuff I'm planning for the past few months. I'm glad to even be here because not just because of my past. I'm talking about this last week. Technologically, I've been having so many issues, and they just got cleared up this morning. So it's very fortunate because this is a big thing to me, and then I had another big thing tomorrow. We're presenting for the Bar Association, so I was glad to be able to get this so I can speak to you guys today. So to tell you before I get into how you guys can help with the financial education and making a difference in the community, I want to talk more about the Seattle Clemency Project. So Alice, can you go to the second slide? So these are some of the things the Seattle Clemency Project, after starting in 2016, it's only been around for 4 years. It works with volunteer lawyers and teaming those lawyers up with people who can otherwise not afford to have an attorney. 31 people have been released. These are men and women who have been serving life or lengthy sentences. 11 prevented from deportation. 700 plus have requested assistance. 200 plus volunteer lawyers engaged in work. 168 clients matched with volunteer or legal aid. Next slide. So I heard a lot about social justice, which I didn't actually expect to hear about today, but it was refreshing, because with mass incarceration that has been affecting our country, our communities, the economy, because of all the money that we put into it, it actually began with state and national policies. And as time revealed, some of those state and national policies were rooted in an agenda to just lock up people and to paint a narrative. For example, Richard Nixon's attorney and personal advisor has said that they actually wanted to, he said one of his agenda items, this is according to John Ehrlichman, said that one of their agenda items were to go to war against the Black community, the destructive Black community, by painting things in the media a certain way, and then creating certain laws to lock people up. So these are things that were intentional, and now we're trying to bring to light these social policies and actually do things at the root cause. Because in 1973, the same year that Richard Nixon allegedly said this, the same year the U.S. government had came up with a study that said prisons are highly unnecessary. If you address things at the root causes, then people won't leave the prison. So one of the things that you guys are talking about doing with low-income people and addressing issues of financial literacy, these are things that can prevent people from turning to a life of crime and prevent a lot of the issues with having to fund prisons through our taxes, because people won't be going to prison on the same scale. Next slide. So Washington State abolished parole in 1984. This is more of just an educational piece. A lot of people don't know that they abolished the parole system, and as they brought more people on board with parole, I was actually a juvenile. I was 16 years old when I got incarcerated, and there's a lot of juveniles in our state that got incarcerated as a young age, as young as 13 years old, and some of them got 58 years or more. So in Washington State abolished the parole, but they've slowly been adding people to the parole system, and the juvenile people who fell as juveniles are one of the people they added. Next slide. Another thing is the 3 strikes law. The 3 strikes law, I actually know some of these guys personally. I know a guy who got punched by a guy who just got out of prison, and the guy who just got out of prison that punched him hurt his hand when he punched him. So they gave the guy who got punched life without parole in prison, right? So next slide. The United States has 1 out of 4 people in prison are in prison in the land of the free. So 25% of the world's prison population is incarcerated in America. Next slide. As Erwin mentioned, I made some choices in my life. This is a picture of my mugshot. This is actually a year after I got incarcerated. So I was 5'8", 130 pounds when I got locked up. Now I'm 6'2", 200 and some pounds. So I was living in extreme poverty, and one of the things that led me to a life of crime is that I didn't know about any type of financial opportunities. I didn't even know about financial aid for college, and that would have changed my entire mindset. So that sense of hopelessness and feeling like you don't have any future leads a lot of kids to turn into a life of crime because they feel like there's no point anyway. So when we educate people on how money works, how banking works, and what opportunities are available to them, then a lot of people wouldn't have the despair that leads people to crime. Next slide. So I'm an idealist, right? But I'm not just a blind idealist. When I was incarcerated, I was getting in trouble when I was first locked up. But then I came up with a system that I called the Redemption Project. And my idea was to change the social dynamic inside of prisons and to create a system that led people to abandon the criminal lifestyle. So it sounded far-fetched at the time, and probably some of you guys might be thinking it's far-fetched, but it actually worked. And it spread to every prison in Washington State I personally taught and mentored over 2,000 people. I wrote curriculums to help people turn their lives around, and it worked to show that you have to have the idea, and then you have to believe in the idea, and then when you believe in the idea and you take a certain approach, you can change the whole dynamic. Prisons have been a certain way for decades before I got there. But now prisons in Washington State have actually changed a lot because of that redemption project. They actually changed the social dynamic inside of prisons, and now wanting to do the right thing is socially acceptable. So it begins with an idea, and I believe that this idea that Alice and myself and Irwin and others have been speaking about, it can make a big impact on our community, and you guys can help in that. The next slide. So just to give you some background with SCP's mentorship program, these are some of the needs we help people with. We coordinate needs with housing, clothing, food, documentation. I mean, even simple things like how to write an email or resume writing, right? We just started a partnership with Microsoft to where they're going to take people who specialize in resumes, and they're going to team them up with our people, and then help them write that resume, and then research companies and help them to market themselves to those companies and try to get a living wage job to get on their feet. But I also know people who have made money coming out of prison. I know some people who came out of prison and got good jobs, making 6 figures, but they're living in an apartment. Why? Because they didn't know how to manage money, right? So they got money and they spent it on a lot of things that they didn't need. So this is why we want to, next slide. This is why we want to have this class based off the FDIC Money Sparks Financial Empowerment Program with the 14 modules. We believe that if we have qualified experts, people who understand the financial market like yourselves, teaching these modules and walking guys through these modules, then we can empower them through that. And utilizing the system that, next slide, Alice. Utilizing the same system that I did while I was incarcerated. So one of the things that I did while I was incarcerated with the classes that I created, I knew that I couldn't do everything, right? So the guys who went through the classes, the people who showed promise, I would teach them how to teach, and then they would help teach the next class. And then as they got more experience teaching, then they would in turn help somebody else who showed promise to teach the next class. So I'm not asking for a long-term commitment. I believe that if we got volunteers from the financial sector who can take guys through these 14 modules and then take the ones who show promise to work as a guide as they help to teach the class doing a run through, and then they would help the next person to do a run through to where you're actually building the number of teachers. And then you don't need the financial experts as much, but they can still be like a shadow, like, answer questions and everything else. But we can then have whole teams of people out over time as we build out, just like I had to build out to have people going to all different prisons. We could have people to go out to all different communities, all different neighborhoods, and teach a whole lot more people in the community. So we expand that knowledge and we expand that financial literacy or financial empowerment. Shout out to Alice. Financial empowerment, and we really changed the social dynamic, and we're making a difference one step at a time. So this is actually a guy who was one of my students, and then he became one of the teachers. And he said what he learned from teaching, right? It taught him social skills that put him on such a platform that when he got out, he skyrocketed. So it's something that's tried and true. Next slide. So this is our pitch. This is our call for volunteers, and everybody who turns their life around has a good impact on the community. This is another one of the juveniles that I was talking about, Jeremiah Bourgeois. He got incarcerated when he was 14 years old and got a life sentence, but due to the parole being adjusted for juveniles, he got out, and now he's going to law school. Stable finances increases some people's ability to maintain a healthy lifestyle, because not everybody's an all-star, you know what I mean? But just being able to have some financial stability will not lead people to revert to that desperation that leads to crime a lot of times. So empowering people financially and creating mentors who can carry on the work, this process amplifies change and the impact that we have on the community. Understanding money is the key factor in making our community safer, and these mentors can share their knowledge with the youth. And so, you know, we want to reach out to everybody, but also we want to capture the youth young, because they have so much potential and so much promise that if we catch them young and they see somebody who actually went through, and not just saying, hey, don't do crime, it's not worth it, but actually saying, don't do crime, here's what you can do, and then giving them financial education, giving them financial empowerment, and then giving them some other tools. I mean, there's no end to the good that we can do through this. Next slide. So you can make a significant difference. Thank you for your support. I tried to rush this fast. I thought it was going to take me longer because of so many slides. But I'm open to Q&A. I did want to leave like 5 or 10 minutes Q&A. It looks like we got about 15. But I ask you to reach out to Alice if you would like to participate in this. Reach out to Alice, and we get this process rolling.
Thank you for that presentation, Anthony. I'm double checking the chat now. We have a question. Is the training / participation for volunteers all virtual based or in person?
So right now, and possibly even moving forward into the future, because, you know, COVID-19 has been a burden in some ways in the educational platform in another, because it showed us that we can operate anywhere. A lot of the things that we thought we needed, we really don't need. So right now we want to just do it virtually, but moving forward, it might be even better to do it virtually, because then we can help people across the state. It won't be just centered in a certain area, but we can actually reach people in a broader platform.
Anthony?
Okay, that's wonderful.
Oh, do you hear me? Sorry.
Yeah, go ahead, Becky.
Hey, my name is Becky House, and I'm the Education and Communication Director for North Seattle Community College, American Financial Solutions. And I was sending messages to secret hidden messages to Alice behind the scenes while you were talking. But, you know, I would love to participate in this. And that's, I mean, talking to people about money is pretty much what I do in my everyday job. And I just think it's amazing, and it's an area of my passion. I don't know if you've heard of civil survival, but that's another group that I'm involved in. And I just very, very passionate about this area. So it's awesome.
So I just want to say thank you, Becky. Becky is also on our board, and she is our Bank On co-chair. She is amazing. And so thank you. And I did send you a message privately back. Absolutely. We would love to have you. No doubt about it. While I have the microphone, I also believe Jennifer Smith is here. And Jennifer Smith is the Executive Director of the Seattle Clemency Project. So thank you, Jennifer, for being here. I don't know if you have a few words you would like to add, but Anthony, I think you are so right on. Thank you so much for your presentation.
Thank you. Thank you. I'm very, very glad I was able to make it today.
Me too.
Yeah, thank you.
So Alice, we have, oh, go ahead.
I'm sorry, I'm not quite sure how this is working, because I think I'm on Alice's Zoom somehow, but this is Jennifer Smith. Just thank you, Alice and Anthony, for putting all of this together. We're so lucky, as you can tell, to have Anthony on the team at the Seattle Clemency Project. He is someone who we match with a volunteer lawyer to go through the process, the release process. He's just done an incredible amount of work and had a huge impact in the community over just the last year. And he's the architect and the creator of the reentry program, along with another man named Carlton Daniel. So this financial empowerment class that he and Alice came up with is just one aspect of our reentry program, but I think it's really important. It's something that we've heard from our clients for a long time, that they would like to understand more about how to get build credit, become a homeowner eventually. And so I think it's just an incredible program. So hopefully a lot of you will want to participate in it. And we are sure that you will get more than you give if you do choose to participate. So thanks, everybody.